Hi there everybody and welcome to another episode of my stock evaluation series. This time we are going to cover the number one, or at least what I think is the number one, defense contracting company in the United States, and that is, as you can see here, Lockheed Martin. For all those of you who may not know what Lockheed Martin is or what it does, well, right here from Seeking Alpha, we see Lockheed Martin Corporation, a security and aerospace company, engages in the research, design, development, manufacture, integration, and sustainment of technology systems, products, and services worldwide. It operates through four segments: aeronautics, missiles, and fire controls, rotary and mission systems, and space. So this company is very, very big when it comes to the United States because it is the number one company that pretty much gives the United States government all their fun toys for like the military and a bunch of other stuff similar to that of like Boeing and Raytheon. So this is essentially what we're going to cover in this episode. But before we get started, let me just remind you to, of course, like, subscribe, comment. It really does help here with the algorithm on YouTube. You can also follow me on my new tech sites of BitChute, Odyssey, and Rumble, where these videos and also the crypto investing videos are also going to go up. In addition, you will also get some exclusive videos as well. And when it comes to Rumble, if you want to catch something that's not investing related and it's more video games related, you can follow my Rumble channel as well. All link in the description below. Alright, so with that said, let's get started with this episode. So, as for that intro, Lockheed Martin is huge. I mean, I just read off like one sentence or two sentences of what Seeking Alpha gives it in like the company profile, and it's absolutely insane. They are in the industrial sector, which is actually like something really, it's one of those sectors that's like really, really niche. It's nice, it's boring, it's somewhat defensive as well, no pun intended, because get it, they're a defensive company. Okay, but yeah, they're pretty defensive since the United States, being the number one country on the planet, we will always need weapons, we will always need protection. So investing in them, even though I understand that there is controversy for investing in them when it comes to, you know, war and all this stuff, at least when it comes to me, the way that I see it is, we will always need defense. We will always need some kind of like missile defense system or something like that. So when it comes to investing with Lockheed Martin, it's kind of like, well, you're going to get their benefits regardless. You may as well just invest in them. So why am I looking at them specifically today? Well, for starters, looking here at the 6-month graph, we see that Lockheed Martin, ever since like since like June, it has just been on a downward spiral, pretty much to like the bottom of around like 335, which is cheap, I guess you could say, in comparison to what it was. But I want to know if this company is actually worth buying into right now, because at the current price of 353, we have no idea if we are overpaying for this or if this is fair valued right now. So that's exactly what we're going to find out this episode. And just like last time, we are going to be using the discounted free cash flow calculator to figure out Lockheed Martin's intrinsic value. And full disclosure, I actually own Lockheed Martin. I don't own a lot of shares, but I do own about 2.56509 shares. And I would really like to increase my position on Lockheed Martin just because of the fact that it's such a good company to invest in. So let us begin. Starting off with the ticker symbol, LMT. Now we're going to see what in the world this company is about. So we get a PE, trailing 12 months of 13.85. We want this to be below 20, which is really, really good. Okay, market cap $97.8 billion with a dividend yield, for all of you dividend investors out there, which I am one of, 3.17. That's above the S&P 500, which is absolutely insane. The amounts paid in dividends per year, it's only $3 billion, $3.1 billion. So let's actually find out if this dividend is even affordable. I also added this payout ratio here as well. I know you can find it in Seeking Alpha, but I decided to add it just because I figured yeah, may as well just have it here. And I also decided to add the percent of shares decreasing or increasing that they have, well, either been issuing or buying back within the past 5 years. So next we have the perpetual growth. So coming over here, we see that the revenue growth year over year is about 6.19. Now this seems very, very doable. So I'm going to go with about 6% for the perpetual growth over here. So let's type in 6. Now we move over to net income. And from what we can see, we have 5.2 billion to 6.8 billion, which is really, really good. That's increasing, and that's exactly what we want to see. We're going to paste that there. Very good. Now we're going to go into cash from operations. Now we're going to figure out the cash flow. Cash from operations is 5.2 to 8.8. That's really, really good. Okay, so that's definitely increasing. Don't want to catch all of it. There we go. Gonna copy it over here, and then the capital expenditures, we have it right here, and let us see what the average cash flow is within these past years. And as we can see, the cash flow is increasing, which is good, and the average is $4.7 billion. In fact, wow, they really had a good year in 2017, a 270% free cash flow to equity divided by income at 270%. That's definitely an outlier. So is 2018 with 37. But yeah, as you can see, the average is about, well, yeah, the average is about 114%. So that's looking good right there too. Now we're gonna go head over to the revenue, and over here at the revenue we have 47.3 to 65.4. That's awesome, right? That's a huge increase from what 2016 all the way up to now 2020. That is like a lot. That's amazing. All right, and now that's good because it's increasing. Now we got total debt, and of course we would like this to be decreasing, but usually it isn't decreasing, it's usually increasing. But it doesn't really matter as long as the revenue and the income and the cash flow are also increasing pretty much at a higher rate than the debt. And as we can see right here, we got total debt 14 to, ooh, actually I did not realize that. Interesting, 14.2 to 12.2. That is a really nice decrease. I did not realize that they were actually decreasing their debt. That's really, really good. Next, we got shares outstanding, and of course we want this to be decreasing, and it is 290 million to 276 million, and that is a buying back shares of about 5.1%. So they're buying back shares at 5.1% since 2016, which is really, really good. And as you can see right here, we already have essentially a target price. However, we want to adjust for that debt just because we want to be as accurate as possible. Now we're going to come over here to cash and equivalents, and once we put in these numbers, then we're going to get the correct target valuation for Lockheed Martin. And as we can see, we got a target share price of about $415 after debt, which kind of does make sense, honestly. A PE of 13.85, we want this to be lower than 20. Yeah, I would think that around 415 bucks, it is considered fair value. Now, obviously, we will want to get some buffer when it comes to this. So, looking at the margin of safety of 5, 10, and 50%, we see that we are actually right there at the 15% buffer. So, what it looks like right now for Lockheed Martin, it is definitely a buy. In fact, looking at the highest price that this thing has ever been at, we see it at 439 bucks. So we are definitely seeing that, yeah, at 415 bucks, currently at 353, Lockheed Martin is 100% a buy if, of course, you believe my assumptions here of 6% perpetual growth and required rate of return are around 8.5%. From what it looks like, Lockheed Martin is definitely a buy, and with $3.3 billion after paying that dividend every single year at a whopping 3.17%, Lockheed Martin right now, it is definitely a buy, at least in my opinion. So yeah, that pretty much does it for this episode. If you like, comment, subscribe. You can also follow me on my new tech sites of BitChute, Odyssey, and Rumble. All links in the description, where you can also catch my crypto investing series. So if you're interested in that, make sure to catch that. And in regards to Rumble, I also have a Let's Play channel. So if you're interested in gaming, make sure to follow me there. All right. With that said, peace out, everybody, and be on the lookout for the next stock evaluation video.